Good afternoon and welcome to Market View this Monday. It's exactly 1400 hours Central African time, and as always, it's a pleasure to have you as your company and to have your company this Monday afternoon. I'm Sifiso Ngumala, and over the next 30 minutes, we will take a closer look at the heartbeat of business in Eswatini, from the entrepreneurs that are breaking new ground to the numbers that are shaping our economy. First up, we are going to look at a celebration of local enterprise, the Consumer Fair, hosted by a peculiar people under the patronage of Her Royal Highness Princess Sakizwe, brought together 141 MSMEs, an impressive 90% led by women and, of course, 70% by youth. A showcase of resilience, innovation, and future-forward thinking, but also just a clear reflection of our demographic dividend right now. But also, we want to continue with our program and get into our Enterprise Watch, where the stories behind the stats, entrepreneurs who, of course, took part in the fair are calling it a turning point, citing real sales, real networks, as well as real impact. We'll hear directly from the ground. Later, we crunch the numbers in our market analysis, from Wall Street's rally to the rise in gold, the dip in Brent crude, and currency shifts, all affecting the Lilangeni, plus a snapshot of regional sentiment from Johannesburg to Shanghai. So let's be again on our Enterprise Watch segment is going to help us really, dig into and drill into the IMF's upgraded GDP growth from, the forecast for Eswatini, now projected at 5.1% in 2025. What is behind this optimism, and what does it mean really for our economic outlook? This is Market View this Monday afternoon, your front row seat to the trends, the stories, and the strategies all shaping Eswatini's business future. Stay with us. Thank you for that. Let's start the show with our business news. Right, on our first story, the Consumer Fair, organized by a peculiar people under the patronage of Her Royal Highness Princess Sakizwe, was held on the 25th of last month, celebrating the vibrant entrepreneurial spirit of Eswatini. A total of 141 micro, small and medium enterprises participated in the fair, with a remarkable 90% being women-led businesses and 70% youth-led. Now, the chairperson of Peculiar People, Melusi Dlamini, said this highlights the growing innovation as well as the entrepreneurial drive among women and young people in the kingdom.
Chairperson of A Peculiar People, Melusi Dlamini, shares the performance of the Consumer Fair.
We had 57 product lines that were completely sold out, which was very impressive. At least now we do have some sort of data in terms of what the consumers gravitate towards. We had plus minus 1,200 consumers that attended throughout the day. We had those that came in the morning. We had some tourists that came during the day, and then we had those that came for the entertainment bit in the evening. And we managed to create at least 57 casual jobs and 3 permanent jobs.
The Minister for Commerce, Industry and Trade, Honorable Manqoba Khumalo, says in the next 3 years, the Mbabane market will be uplifted.
MSMEs need a lot of support from government, from the private sector, from city councils to afford lama opportunities not as a once-off. I want to pledge here in front of you, would say, over the next 3 years, I will work very hard to find money to improve and upgrade your market.
Municipal Council of Mbabane's Chief Executive Officer Gciniwe Fakuze says they will pull their full weight behind the Consumer Fair and A Peculiar People.
We should continue as a city, not only to just do what we did that day on the 25th, but we'll find smaller ways to continuously do it, Minister, so that the 25th is not just an event, but also a celebration of what we'll be doing continuously as a city.
A Peculiar People has promised that the Consumer Fair will be rolled out to all regions in due time. For Market View, Nelson Ngamandla, Vuminkosi Nzinisa Mbambane.
And of course, entrepreneurs who participated in the fair organized by a peculiar people have praised the event for making a lasting impact on their lives and businesses. Many of them have described the fair as a turning point, stating that they were able to make significant sales as well as create valuable networks that will help them grow in the future.
Entrepreneurs say this has been a good networking event and they were able to sell their wares. Lungelo Dlamini from Patience Delight says he made over 4,000 emalangeni, money which he does not make on a normal day.
Our stock was sold out. We approximately made we had a target of maybe 500 units and we reached it. So the fair to us is very enlightening and growing because we are able to show the people of Eswatini what are we doing in the background, and then we want to teach them how to consume our products, and then we also want them to. We would like to have an economy whereby we don't have to import things from other countries anymore.
We're able to meet potential clients, but for us, since we also do corporate gifting, we also got the opportunity to find potential suppliers as well. So it was just a beautiful experience of seeing what's being made in the country, and we're looking forward to putting most of the products into our hampers as well.
Mbabane is the Member of Parliament. Welcome Dlamini appreciates that the consumer fair started in Mbabane. He says he hopes more businesses will be able to showcase their products in the next consumer fair.
As Mbabane, we are proud to iqalela the concept, and say it vele. We will all love Mbabane as Mbabaneans, and siyathemba ukuthi tawuqhubeka and itawukhula from the lawaswabonile manangu lapha ema business bakhona on the day. We hope they will double next year.
Chairperson of A Peculiar People, Melusi Dlamini, announced that the launch of Made in Eswatini store is underway. He says this will be an e-commerce platform that will showcase and sell certified Made in Eswatini products. He further said this online store is a bold step towards empowering local producers, promoting quality Eswatini-made goods, and reaching customers far and wide. For Market View, Nelson Ngamandla, Vuminkosi Nzinisa, Mbabane.
That marks our business news segment. We have our Enterprise Watch segment where we look into the International Monetary Fund issuance of a promising revision for Eswatini after the break with Sanele Sbia.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. This is our Enterprise Watch segment. Now we want to really understand this significant development for Eswatini's economy, where the International Monetary Fund has revised its GDP growth focus for the country. They project a robust 5.1% growth for 2025, which is up from the previous estimate of 4.2%. Now, this positive outlook comes despite ongoing global economic challenges, including rising tariffs and geopolitical tensions. In-house economist Sanele Sbia joins us in studio now. He's here to help us make sense of the numbers as well as unpack what this means for the country's economic future. Sanele, good afternoon. Welcome to the program. I think it's interesting, this revision that is happening at a time where many economies around the globe are bracing for impact. And of course, Eswatini is accelerating, 5.1% growth projection. Of course, it puts us firmly where one could call it a regional sort of top-tier seating. Tell me about this sudden surge. What is behind it? Is it driven by a specific sector or a policy shift or a broader investor confidence? What is it?
I think, Mr. Ngumalo, one would have actually somehow predicted that it was going to go this way, considering that when we saw the first, first ramp of tariffs coming through from the US, Eswatini only just remained at that universal 10%, so that somehow signaled a somewhat of a favorable stance by the US on Eswatini, and also showing that going forward we are not likely going to feel much of the wrath of those Trump's tariffs, right? But what this borders on mostly, Mr. Ngumalo, is the fact that Eswatini has over the past decade, the previous administration, Eswatini has been setting the scene to ensure that we're able to start developing the economy and, we're able to start growing the private sector. We're able to start driving growth, which we'd not seen before. I mean, just the previous year, we saw growth coming out at 4%, something we'd not seen ever since 1994. There was a new figure coming out. So now we're moving up to this 5% figure. Again, largely driven by strategic investments in capital projects, showing that, Eswatini still is actually positioning itself to participate in the global landscape. And also we've seen movements within the Investment Authority and within the government of Eswatini, really just trying to market Eswatini as the investment destination. So we're looking at all that capital expenditure growth, and we are looking at the fiscal stability. If you look at our fiscal variables, we seem to be doing very well in terms of managing our economy, in terms of when you look at our debt to GDP ratios, they're actually amongst the smallest in the region. Over and above, we are a middle-income country. We should be working at around 60% debt to GDP ratio, but no, we're not at that level. That shows that we are strongly managing the fiscal space within Eswatini to ensure that we drive this sustainable growth. And also, when you look into this current GDP figure projections, in as much as we are always suffering from that fluctuation in SACCO receipts, but the fact that we now have this revenue stabilization fund in place goes to show how well the government of Eswatini wants to manage a fiscal pace, making sure that we are somehow taking into cognizance the fact that we might not have as much revenue as we would have expected coming through from the SACCO receipts for, say, the next couple of years and going forward.
Now, I'm not one person to be particularly excited by headlines for many reasons. I work in a journalism field, so I know how we tend to make headlines look palatable. My biggest question is always sits on, who really benefits, because, raw growth figures can only tell part of the story. Who really benefits? We have people who we call rural entrepreneurs, ordinary Maswati. We have women-led businesses, which we have, spoken about on our business news story. We have the youth that we see as part of a very important, demographic dividend in our economy. Do they really feel, this sort of development, or is this growth still sitting at the top?
I think that's the one thing we need to be cautious of as a country. That's what we need to guard against in terms of, yes, the economy is growing, but are we really leaving no one behind as we would want ideally to happen? So what we need to do in that case, Mr. Ngumalo, is we cannot lie and say that everyone is feeling the growth. But what we need to do is we need to make sure that we are able to spread the growth to actually benefit everyone within the economy. You've mentioned your women-led enterprises, the local SMMEs. I mean, we are talking of capital expenditure-led growth here. So what we need to do in this, make sure that in these very big capital expenditure programs, we have a way of deliberately in making sure that our domestic SMMEs actually do benefit from this. We need to make sure that our youth-led enterprises actually benefit from this. That's direct payment, so that we keep a lot of the money staying internally within Eswatini. It's one of the pleas that we've been making, that I've personally been making regarding this joint venture, this JVA type of contracting within the capital expenditure portfolio. But what we will have to do there is make sure that people are participating as equals, and we are building local capacity so that domestic industries also do benefit from that, Mr. Numa.
I'm particularly very, impressed by the leadership of His Majesty King Mswati III. And, as you were speaking, I was just really browsing through the highlights of recent newspaper headlines, and I do want to highlight this one. And I want to understand whether that assertion that you just made, is validated by some of these developments. So this one is from Friday, the 2nd May 2025. King commissions 60 million Malangeni Hosia RDF, calls for respect for elderly. Well, that's different. But the 60 million Hosia RDF, we saw part of this story happening there, a lot of localization happening, a lot of empowerment for our rural people, our rural communities. And he is, of course, there's the real endorsement for cutting-edge entrepreneurship. Is that what we need to do while we, at the other end, we position ourselves as an investment destination?
Exactly. That's what we need to do. You need to make sure that if you become an investment destination, you have the capacity to actually implement and be part of that investment destination, Mr. Nxumalo. I think it's one of the things that people have always assumed was not what China was doing. What China does is they make sure that they have the skills and the capacity that any investor would be able to use. It's not just an issue of cheap labor, it's an issue of having the right skills, so that when an investor comes in country, it becomes relatively cheaper for them to produce their commodities in Eswatini because they have the right skills. So we also need to think around, how do we become tech ready? How do we get Eswatini to be tech ready and be able to move into those high value type of investment destinations, instead of just those low value products that we in most cases would end up developing. So we need to also strategize and structure our education system, our human capital system, to ensure that we do have the right skills to attract the right investments for further growth.
What is cushioning us against these external shocks that others are struggling with? We just saw a chart on the screen where a lot of other economies seem to be receiving the brunt of everything, and yet Eswatini hovers around a good 4%. What is really cushioning us?
I think for now, Mr. Nxumalo, what is cushioning that number is the fact that we have what we call a fully funded budget. So regardless of the international dynamics that are happening, we've already seen in today's headlines where the government of the Kingdom of Eswatini has already secured 1.8 billion, 1.9 billion from the World Bank. So when the budget was tabled, all these monies had been identified, and there were sources of funding that had already been somehow agreed upon. So that somehow gives us a bit of a smoother sailing during these tumultuous times compared to what our peers would actually be doing. And also the fact that we got the 10% universal tariff against the US, that somehow shows that regardless of whatever happens, Eswatini still remains in the US's good books compared to what other African countries were receiving. Both Lesotho around 50%, South Africa 30%, and we were just the only country in Africa that actually got that 10%.
Yeah, Eswatini they highlighted with the yellow for anyone at home who may be struggling to really navigate through this graphic here. But let's turn to the risks, suddenly. Every upswing comes with its own potential blind spots. What are some of the vulnerabilities that could derail this momentum? Be it inflation, it could be unemployment, it could be dependency, or external trade dynamics. What could it be?
The most emergent risk right now that we're seeing is the exchange rate risk. Our exchange rate has been very volatile of late, purely because there's a lot happening in the geopolitical front and the global trade war that is ongoing. So that's our most immediate risk, and more especially since we're looking at funding quite a huge chunk of our capital expenditure through dollar-denominated borrowing. So now that currency risk, that fluctuation is not going to be good for us in the medium term and to the long term. And then also there is the issue of imported inflation and an overall diminishing global demand, which in itself would actually drive our GDP figures down. And also when you look at South Africa's GDP figures, they've been downgraded from 1.6 to say around 1%.
Yes.
So that in itself will speak to lower demand for our commodities, since South Africa is our major export destination. So we might see those effects come into play where our commodities to South Africa are not as highly demanded as they would have been with their 1.6 growth trajectory. So there is, of course, going to be that international trade war also that's going to weigh in on Eswatini, because what's affecting South Africa's figure too much is the international and the global trade war and Pretoria's relations with Washington.
Suddenly, let's be our economists. I'm tempted, before we close, I love to do this now. This could be our calling card to the world, right? I wonder if you were in a boardroom somewhere in the US, in New York, or right here in South Africa. South Africa is our major trading partner. And, you are pitching. What would be the most, let's say, the first 3 words to your headline pitch?
What words, Mr.
In terms of course, pitching for Eswatini as a place to invest. This could be our calling card to the world.
Well, it is actually. That's what we need to understand. We need to understand that Eswatini is actually looking favorable in the eyes of the U.S.
How do you tell the U.S.? How do you tell potential investors in the U.S. or in South Africa if you're in a boardroom right now?
No, I would simply say if you want access to the U.S. markets, it seems Swaziland is the right conduit to use right now. Eswatini is the conduit to use right now because it seems we are in more or less good standing with the U.S., given that we are on the 10% universal tariff. Yeah.
Okay, fantastic. So let's be our economist chiming into this revision by the IMF, which speaks to Eswatini's GDP growth upwards to 5.1% now from 4.2 this year, as articulated by our sub-headline on your screen right now. Let's go straight into our economic analysis now with the same guy.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
This is our market analysis. Welcome back. You're watching Market View, the Monday edition. Thank you for staying with us. Let's look at our markets today. Sunless Bia is telling me that a lot of them are closed, but we have seen a bit of movement in other markets. Of course, we will not be really saying anything about Asia, as it seems it is sleeping. So we are seeing a couple of movements in the United States. Wall Street, everything in the green. What is happening? Is everything looking good finally?
Not necessarily. It was earnings season. So, we've seen the likes of Microsoft, really your Meta coming into play and really just posting good numbers. So that's what markets are leaning into. And also we do know that we saw the very sad news of the U.S. economy, shrinking in the first quarter of 2024. So right now, what that has raised is the expectations that, Jay Powell will actually start cutting interest rates, which is what President Trump wants. So that's what markets are just basically looking forward to right now to see what's happening this week. And we do know that the Feds are meeting this week, and we are going to hear that decision in terms of those interest rates. But those numbers are largely driven by those earnings figures that we're looking into last week, Mr. Nguman.
So this is not what one could call a genuine rebound. It's just technical sort of bounce in a jittery market.
Exactly. And, if you look at the futures market, just that we are not, we don't post the futures market yet. The futures are showing a bit of subdued activity today because, we woke up to something, it's very interesting in Washington these days. So we woke up to President Trump targeting the movie industry now, saying, no, I'm going to impose 100% tariffs on all people who are buying America, who are selling movies into the US, And you come to think of it, the US is actually a major exporter of services. So you then ask yourself, what's the point of these tariffs? Because the US actually has a serious, they have a serious trade surplus in terms of goods and services, right? So that's what now markets are trying to jostle with to think what is happening right now, right? And we do know there is that automaker tariff that's coming in sometime this week. So markets are a bit subdued going into today's trade. Yeah.
You've spoken about a sort of technical bounce in the U.S. market, of course, premised under the earnings sort of season that is happening there. Yeah. It's a different song that is being sung by Europe right now. It's a different tune indeed. We are seeing a lot of, divergence there. But, of course, we are seeing that the DAX is eking out a modest gain, but everything else, not so much. What is happening?
Again, calm before the storm. The DAX is just basically bracing for impact when those tariffs on automakers come into play the following, sometime this week. And, France is already on that stance. Remember, in France, there's also that issue of the debt, how France is going to manage its debt. So now that's another very sticking point, which has markets really on edge. And also looking at how that automaker tariff is actually going to affect those exports from France into the U.S. So we have a bit of those happening. And by the way, look at overall consumer confidence within the Eurozone. That's somehow on the positive. Remember that, interest rate was cut, and that is actually supposed to bolster consumer spending within the European economy. We've seen Christine Lagarde take that type of preemptive interest rate cut to actually buffer the Eurozone economy against what President Trump is doing with these tariffs.
A data vacuum in Asia, a silent index in Eswatini. Maybe before we move on, why?
It's been a holiday in Asia since Thursday last week.
Okay.
So the markets have been sleeping since Thursday last week. And then in terms of the local stock exchange, the Eswatini Stock Exchange really is what we call a dividend investor market. It doesn't really move much to international to international news, but rather what it would move to is domestic fundamentals. You know, the moment we start seeing fundamentals in the local economy, you know, showing signs of weak profitability, then that's why we're going to see a bit of a sell-off or a bit of a more of a buyback.
2.4 surge for gold, 1.35 sink for Brent crude. What is happening here? Is it, you know, something deeper at play, inflation, hedging, or supply side disruptions? What's happening?
So with the price of Brent crude, what we're looking into there is that's the future contract of Brent crude, you know, already pricing in the fact that we're already seeing a subdued activity within the U.S. economy. So the U.S. has actually sunk for the first quarter. So that in a way signals that if and until and unless we see those changes in those interest rates, the U.S. economy might actually just lead the entire global economy into a recession. So that's what Brent crude is looking into then. I mean, remember just last week it was somehow rebounding to that 65 region, but today it's just back to that 60 region based on those news coming out of Washington. And then in terms of gold, what gold is doing today is we're seeing that somehow shift back into gold post that you know, that tariff on movies statement ever since that came out. And we know that President Trump is not at all a fan of the Federal Reserve Chair. So as we move towards the announcement on interest rates, gold is actually expected to gain a bit, you know, into the next 2 days as we move to that meeting.
Whether I allow you to answer this last question will be a confirmation from our producers. Our currency watch, we are seeing the SZL strengthening slightly here. You know, it's firmly a good margin across the board. How much of this is riding on the mere fact that, you know, there is the broader dollar weakness versus the local fundamentals?
So that's a mix of both, where we're seeing that generally the dollar is weaker across the globe, but also when gold gains, you know, South Africa, on whom we anchor our currency, is a resource-based economy. So with that strength in that dollar, in that gold, so that's why we're seeing the Lilangeni also gaining ground, and also the fact that the GNU still holds even after this entire VAT debacle. So that now bolsters a bit of confidence in business in terms of what happens in the Southern African market, and that's why we're seeing those gains rubbing off on Eswatini.
I was reading the scroller while you were talking, and I just saw that Trump says he's going to lower tariffs on China at some point. This is very interesting what is happening in Washington. Thank you for staying with us on Market View. This has been the first edition of the week. We have 3 more episodes to go this week. We hope you'll be tuning in for the remainder of the week. Have yourself a good afternoon and a good day. Bye-bye.